My name is Jack Hanney, and welcome to this week's edition of The Insider. The Fed is gathering in Jackson Hole, Wyoming this week for what will be Jerome Powell's last economic symposium. The big question is whether or not the Feds will cut rates in September to support the labor market, or if they'll keep rates steady due to the consumer price index and the producer price index inflation numbers that came out last week, significantly higher than they hoped for. So the Fed is really backed into a corner here, and it's eerily similar to the 70s era stagflation period, when you had persistently high inflation and now you have a labor market that is cooling. Now, keep in mind, we are in panic season for the stock market. That is August through October, and September and October are historically the worst performing months for the stock market. Now, one thing that many investors don't realize, let's just say you had shares of a certain company that were $100 a share. Now, if that stock were to lose 50% of its value, it would go down to $50 a share. That stock now needs to gain 100% in order for you to be whole, because at $50 a share, if it gained only another 50%, that would be $25 a share, and it would be at $75. So again, if you have stock in a company that's $100 a share and it goes down, say 50%, it needs to gain twice as much to make you whole. So that's very important, and most retail investors do not realize this. I am not a certified financial investment advisor, nor do I give tax advice. JP Morgan last week came out and stated they anticipate gold to hit $4,000 an ounce in Q1 of 2026. That is only 6 months from now, $4,000 an ounce. And that would be in line with a 20% gain from the 3,300 that gold is at right now. Silver is approaching $40 an ounce and coming close to $39 an ounce, holding above that $38 an ounce. You can visit us at www.patriotgoldgroup.com or call 1-888-301-7012. Again, that's www.patriotgoldgroup.com or call 1-888-301-7012. Again, we are in panic season for the stock market with the uncertainty around tariffs. Everything is hinged on a rate cut in September. We'll see what Jerome Powell says from Jackson Hole, Wyoming. Goldman Sachs warned, based on Jerome Powell's testimony in Jackson Hole, Wyoming, stocks could slide as much as 15%. So if Jerome Powell does not with certainty state that there'll be a rate cut in September, anticipate significant volatility in the stock market, and we'll see a lot of money moving out of stocks, rotating out of stocks and into safe haven assets, gold and silver. Thank you, and I look forward to speaking with you next week on an episode of The Insider.